Good afternoon, Realty Pros, and welcome back to another week's Realty Talk. And I hope everyone had a wonderful holiday. And we're back and we're ready to close out the end of the year strong. We are privileged to have with us today Mr. Michael Cooper with Certainty Home Loans. And so we're going to go ahead, we're going to get right into it, and we're going to turn it over to Mike, and he can go ahead and he can take it over.
All right.
Welcome, Mike, and thank you for being with us. Oh, Mike is representing too. He got his Certainty Home Loan T-shirt on.
Well,
Okay,
we had to dress down today. We put up Christmas decorations, so I'm not really a handyman, so I'm the best light bulb holder in the office. So
okay, everybody has a job.
Yep, I'm doing my part. And I moved the boxes to the trash can, so that's my job.
Okay.
Anyway,
all right.
Well, good evening, good afternoon, Realty Pros. It's good to be here. It's good to see another day, another Thanksgiving, another December. I'm excited about 2023. You guys have no idea. First of all, let's go back down memory lane for a second. And this wasn't part of my spiel, but I tell you, 2022 has been a rough one. We've seen highs and lows, we've seen valleys, we've seen peaks, we've seen everything. But the good thing about it, we're still here today and we're still doing the same thing. We're still trying to figure out ways to continue to earn that income, earn that client, win them over, build a relationship and move forward. And I'm excited about it. I've already been to a couple holiday events and just listening to all the different conversations of all the different agents and the loan officers. The buzz is building up. We're all in the same boat. We're all working together, but we all kind of see some light at the end of the tunnel. So with that being said, let me give you a couple of tidbits, tell you what's going on in the market, tell you what's going on with Certainty, and then I want to address those questions that Kermar had, because that's very important. That's a good leadway to everything I need to talk about. So first of all, January 1st, 2023, this is good. Might not mean a whole lot to you right now, but you're going to love it in a minute. The loan limits, Fannie Mae, Freddie Mac has already agreed to increase their loan limits to $726,200. That's $726,200. That means that the feds are looking at this. Now this is kind of crazy because rates are higher, the inventory is lower. We're struggling, as a whole, as a nation, to get, we were used to the business. We've seen rates just jump up like never before. This is the biggest leap of rates I've ever seen out of 24 years this year. But with all those things going on, usually the pattern since the 90s of the business is that they don't increase their loan limits. Why are they increasing their loan limits? Well, it's kind of consistent and it's kind of right on the same path of what's going on and what I'm reading, what they're saying that what's going to take place. So first of all, in the month of December, this is a great time to go back and grab some of your first-time home buyers that are trying to be renters and that are trying to slow down the pace because of the interest rate. Well, the rates are slowing down a little bit. We haven't completely seen the bleeding stop, but what the feds are saying is that I read the article yesterday that they think 95% of the people that sent all the articles out are saying that feds are going to slow it down. And they don't think that the hike is going to be any higher than what we've seen or what we thought we were going to anticipating next year. Next year, about 3-4 months ago, they were talking that the rates were going to be 8.5%. Now they're talking about we might stabilize a little bit in the month of December. We might have one more little hike in January, but that's it. These things are really important. So I'm talking numbers, I'm talking rates, I'm talking feds, I'm talking increase by Fannie and Freddie. Why am I saying this? There's light at the end of the tunnel. They see it coming. The prediction is that the rates could go back down under 6%. They said in July, but now they're beginning to say as soon as early spring. I'm loving this because with that being the case, they know something. If the rates come back down to anything under 6%, and they are increasing the loan limits, and with all the new programs, this is a good time for us. We are getting excited. The buzz is all around. I'm talking to friends at Eagle Bank, Navy Federal, Pentagon, Federal Credit Union. We're all in this together. So get excited about that. There's another thing that they're releasing and a lot of lenders are doing are the hedge rate renegotiations. What does that mean? I haven't seen them do this or emphasize this like this in a while. So if you have a client that's locked in at 7% and the rates do drop now, we can actually drop that rate and it won't hit them that hard. That's perfect. I mean, this is a great time for us to start selling these things to all our newbies, our first-time home buyers, and our renters that, hey, we can actually move forward with this now. You can actually get in place to get ready to purchase a home now. And why? Because things are lining up for everything to work in our favor. Rates should be dropping soon. We have renegotiations and we got loan limits. They see something, and usually when that happens, I'm getting excited. It's going to be a great time for us next year. So get excited about that. Grant programs. There are more and more grant programs coming out. I told y'all that the last time. You still have to be careful. Some of them, everything that's glitter is not gold. But there are more grant programs coming out because people, again, are getting ready for 2023. I'm excited because there's too many things that's lining up. Rent is going up. If you have renters, they're paying almost the same amount as if they were a homeowner, except they don't have the tax break and they're not building equity and they don't have a sense of ownership. Rent is going up and up and up and up and up. I mean, this is every sales Zoom meeting. This is all we're talking about, that rent is going up. So one of the things I wanted to share again is that if you have a renter and you have one of those, and Shea Porter was the best, he was sending my way. Let us take an opportunity to see. I mean, if they have to stay as a renter, nothing beats a failure but a try. So let's go for it. But the thing is that if we can look into that situation, a lot of these renters we can convert into homeowners. And if it takes a couple of months to get them there, and we got to work on their credit, it's a good thing. That's when we all work together and talk about all the different things that's going to be taking place in the mortgage industry. Here's the best selling point. When you work with a lender and you have a good rapport with that lender, and there's several, and you can have several lenders that you're working with, the best thing about it right now is that you can build confidence in your first-time home buyer. It's going to be some highs and lows. It's going to be ups and downs. It's going to be some fights, not fist fights. But if you stick with it, eventually you'll get them to that point. I'm working with a transaction right now where it seems every other day the buyer is almost bipolar, it feels like. But the thing is that every other day she gets cold feet. This is what we're going to see with first-time home buyers. So what we have to do is pack our patience, work as a team, share confidence, build confidence, share motivation, share testimonies. These are the things that's going to help a lot of these first-time home buyers that are nervous this day and age. Now, with all of that, Kermon brought up a point or a question that he's raising about, can we buy down ARM interest rates? No, you don't want to do that, Kermon. What you normally would do is do a temporary buy down. And I don't know if you remember, we talked about that probably about a couple of months ago. You can do it, but here's the problem with that. And the reason I said no, you don't want to experience that. What happens, Kermon, is that the pricing, and everyone, the pricing on that interest rate will cost a whole lot. So if ARMs are not big right now, even though we're doing it, but Fannie Mae and Freddie Mac, they have a way of saying they push us to where they want us to be. And so with the margins being high and the pricing being high to get those ARM rates, it's going to cost your client a lot more money. You don't want your client to go through that. I mean, I'm selling ARMs, but I'm not pushing them. And so the presentations now that I'm doing with first-time home buyers, I show them FHA, and then I show them my arm, fixing an arm. That way they can see the difference. But 9 times out of 10, the ARMs now, especially if you buy them down, in some cases, the pricing is almost the same. So you got to be careful with that. I would say that's case by case. If you're already in a situation with a loan officer on that one, all you have to do, Kerma, is just call that loan officer and ask them the comparison, and then you should be good with that. Now, do you guys have any questions before I move on?
I have one more question, Mike.
Go for it.
Okay, so you had said that they had increased the loan limits. Okay, in high cost areas, the loan limits were already kind of high. Did they increase those as well?
Yes, sir. Very good question. Very good question. They did increase them. And here's the funny thing. This is where it goes into this is the benefit. This one is fun for us, okay? And I'm sharing this with y'all. So y'all, I'll put on your loan officer hat for a second. Y'all all are mortgage gurus right now. The thing is, the reason why the 726-200 goes into play is because that's still considered conforming limits. That means that we don't get hit with all the adjustments. Now, the high balance ones are fine, but they have hits on them, which means that it could cost the borrower a couple of extra dollars just to get that high price and interest rate with those high prices loans. But if you stay at 726-200, most of the average loans are not going to go over that. You don't get any hits, you don't get any adjustments. That's where it's awesome. Now, I know you come on, you're doing something for $1 million. Yeah, most of them are going to get a couple of hits, but in most cases, they're going to have to put 20% down. The other thing about the 726-200 is that in certain cases, you can buy this, you can purchase a home for that price and only put 3% down. So as long as it stays conforming, you can actually still benefit with the minimum amount of money down as long as it meets the state guidelines. Now that's very important. Oh, I'm sorry, I apologize. As long as it meets the county guidelines, it has to meet the county guidelines. And so what do I mean by that? And you have to be careful with this. I'll give you last year's information. I'll give you what's going on now. And this is just an example of how it works. Prince George's County, Montgomery County, or Washington, D.C., their loan limits might be 726,200. But Howard County, which is a nice neighborhood and a good area, they're down to like their max loan amounts are 526, something in that area. So you have to be careful. So, when I get deals like that, I usually have to do what they call a combo loan because the max that I can do is lend on a high price house in Howard County is 526,000 or 529,000. I forget what their new ones are because they increased theirs as well. So you got to be careful. You got to watch the counties, but you can't do it. Anyone else?
Thank you.
And this is not like D. I'm nervous. All right. Well, D, I'm gonna go on. I'm gonna move on to the next one, and then you're far away if you have any more questions. So,
sorry, I asked my question earlier and it had nothing to do with loans.
I'm just not used to that, D. That's all, but it's all good. I appreciate it. Well, the other thing is, we're finding now. We talked about, and I know you hear this from a lot of folks about pre-approvals, pre-qualifications, trying to get people out there and what's the difference and stuff like that, because someone raised that question the last time. I said, okay, the next time I'm gonna bring that back. So just a tidbit about that part. The difference between a pre-approval and a pre-qualification is very important to understand that if you are a buyer's agent and if you're on the listing side. So if you already know, good, kudos to you. If you don't understand it, I'm just gonna drop this information real quick for you. So what happens is a pre-qualification is basically, you'll see a lot of these when a lender will pull the credit, take a quick look. They might even plug in all the information on the application themselves or allow the borrower to do it. When they put all that information in there, it's really based on what the borrower is telling them. They can actually issue a pre-qualification based off of that. But usually what the pre-qualification letter is supposed to indicate is that I did pre-qualify Miss Bowie, and so far she's good. I verified her credit scores. But based on these other items that I need, this will help me to continue the process, which is normally W-2s, pay stubs, bank statements, or tax returns. So the pre-qualification actually is a soft hit or it's not as strong, it doesn't carry that much weight. Whereas the pre-approval means that you've verified all these things. You've verified the W-2, you've verified the pay stub, you've verified the tax returns, You ran the file through desktop underwriting, and you ran the file through loan prospect, which means that you have an approval. And it's the closest thing to submitting the file and getting a commitment letter to move forward. Sorry. So with that being the case, you have a pre-qualification letter. It carries some weight, but it doesn't carry a lot of power. That's very important for you to know, because if you have a house that you're bidding on, you're submitting a contract, and it says pre-qualification, there's a lot of times that you're not standing strong, or it's not carrying that much weight if it's not a real pre-approval letter, okay? Most listing agents or seasoned listing agents know that, so that they won't take that. And if they do take it, they probably kick it to the side. Pre-approvals are good. That's a lot better than the pre-qualifications, but the best thing, and what we're trying to do more of now, is get a commitment letter even before we get the house. I'm sorry. The commitment letter is very important, because the commitment letter means that the underwriter has already reviewed the file. The underwriter has already put their blessings on it. And the underwriter says that Ms. Bowie has been approved, not pre-approved, not pre-qualified, but approved. And I've verified her W-2s, all her income, her assets and everything. All she needs is a house, a contract, and title work and homeowners insurance, and she is ready. That's the wave, and that's the way we're trying to get to with all of our files now. We want them all with commitment letters. That's almost the best thing you can do. That's as close to being as having cash on hand. Whenever we do those, just like that, we win every deal. I think the last time I told y'all I was closing one for 1.2. Well, the next one is going for 1.3 next week, and it was the same thing. We had a commitment letter in advance, got the contract. We've only been working on this file for not even 2 weeks. Not even 2 weeks, and it's getting ready. We was trying to close it last week. And so, because when everything's done in advance, it makes it easy. And so I'm big on it. I've taken this whole notion. I like to be prepared when I do everything else on a personal level. So now we're trying to be proactive more on the financial side and in the loan officer world or the mortgage world. And if we can be proactive with having these solid deals in order with commitment letters, it's going to make y'all life a lot easier. We're preaching that to everyone here because we know that next year is going to be a booming year. Any questions?
Yes, now.
Hi, that's my girl.
So now I would like to know if you have any information about the programs, because we had started talking about that, but then we didn't have any details on most of them, the Maryland, the state programs or the county programs.
That's a good question, D. And you're about to get a whole list from Satona, my assistant. She's going to send it to the whole brokerage. And you probably won't get it till like maybe the third week of December.
Oh,
that's
okay.
Because we want to get everyone. And I don't know how many of y'all do work or are licensed in DC. DC is killing it with HPAP. So, and I know we talked about that before, but we're doing a spreadsheet where we can have every program. We need a few more that we're working with, and we're a little overwhelmed right now. So here's the funny part. I'll tell you a little bit about what we're doing with Certainty. Certainty is a correspondent lender. Now we're a direct lender. We're owned under guaranteed rate. Guaranteed rate is what? One of the top 5 lenders in the whole nation. Yeah, we're right under guaranteed rate. So guaranteed rate really owns us. So all my emails now, everything that's submitted to me says guaranteed rate and Certainty. So I like keeping both identities. You know, it's the Cape Crusader type of thing. Whereas I can actually be aggressive sometimes on the Certainty, where I have to do reverse mortgages or things with 560 credit scores and stuff like that. So I do keep that because I like to still broker deals, but under guaranteed rate. And this actual migration has been going on for the last month. The official kickoff is December 5th. And once we get this, they're going to send us a whole slew of programs that we use in the state. So they've already started working on it. And so I'm just giving Satona a couple of weeks so she can organize everything and send it out to you. Then once we send it out, we're gonna have to do a do-over so we can discuss all those programs.
Okay.
Absolutely,
Got it.
absolutely.
All right.
So,
Anyone else?
so Mr. Cooper,
Yes.
yeah, you know, in another direction, in another direction. So what can we, as agents, do, when we have buyers that are looking at new construction and we're up against the them and working with their lenders versus, okay, they've already been pre-approved through you, but in order to get certain incentives, you know, well, you know, you need to go through, because I just had someone like that was,
Right.
you know, had a pre-approval, but ended up going with the um, with the builder's lender. And you know, it's funny because we're going to be closing, but she is like so frustrated at this point right now.
Yeah.
And so what can we do, you know, to be able to keep them where we know that, you know, they'll be taken care of, and maybe even still be able to get some of the incentives that the builders are offering?
Well, the first answer is called Jasmine Porter. Jasmine has a gift for doing that. I've worked with her with situations like that, and she nailed it. But what normally happens is, first of all, builders want the business. You got to respect that. They want to keep it in-house. And my selling point has always been, let's do a comparison. Even though the builders might give you 20,000 and the lender can only give you 10, what else is going on? Now, a lot of builders don't want other lenders, outside lenders involved or title companies involved, because we can call out most of the extra fees that they're doing. I mean, they throw a lot of stuff in there. So yeah, I'm gonna give you 20, but I'm gonna also charge you 18. So you have to be aware of what's going on. And that's not the case with every builder. But what you can do is, and it has to come from the buyer. The buyer has to say, I'm willing to do this, but I work with this lender. And this is what I used to always tell anyone. I've been working with this lender for years. He's built my credit score. He worked with me. There's a relationship I have established. I want this house, but I don't want anyone else to pull my credit report. We got my credit report to a certain place, and this is who we want to go with. If you're strong enough and you can stand and hold fast, 9 times out of 10 they're caved in, because they still, at the end of the day, as much as they want you to go to our lender, they still want you to buy their house. And you have to understand that. And so a lot of times people get intimidated by that. So you have to go with our lender, you have to go with our lender. But it takes, you got to be almost kind of arrogant in a way about it and say, hey, look, I'm not backing down. I want this house, I'm gonna buy this house, and legally you can't tell me I can't use who I want to use. And in a lot of cases, if you go about it the right way, they'll still go ahead and give you money towards the down payment. Now, in some cases, I've seen them cut it in half, which is still good, because I've seen them say, hey, look, we would offer you 20, but if you go to your own lender, we give you 10. But that's still fine, because we were just still matching and give the other 10. So there are ways that you can do it. I've always recommend that, if nothing else, if your buyer is still on the fence and they want to go both ways or one way or another, and they're not sure, just do a comparison. Get a loan estimate right away and do a comparison. A lot of new builders do not like to give out that loan estimate right away, because they know theirs is going to change, and they know that we can hold them to it. So they don't want to expose that information. I normally do a loan estimate, and most of you know this. I will over exaggerate. I will overestimate my numbers, because it's just, I have to do it because it works 95% of the time. But when I'm competing with a builder, I have to give the exact information, because I'm in a battle. I put on the right armor and I'm ready to go toe to toe. The thing about it is, when you're going toe to toe with these builders, 9 times out of 10, they understand when they're competing, so they have to put the accurate information. And that's when we get to break it down and we can, go through the estimate with fine tune code and we can find out what they did, what they overinflated and all those kind of things. So hopefully that helped. And I do have a question from Mr. Curtis Price.
Hey, what's going on, Coop?
Hey,
How
man,
you doing today?
doing?
I'm doing wonderful. Hey, quick question. As we're talking about new builds, how would that work with, there's new build development? So, they're going to typically have a lender that they want to work with. How about when I have a client that's really entertaining the fact of like buying land and then having, their home built on the property?
Actually, that's if they do what they call a construction to perm and they go from land and get the property built, that's the easiest one to fight against the lenders, okay? Because a lot of the lenders that they have with the builders, a lot of them they don't like to deal with those as much. In this area, you have a handful of lenders that will do that. I mean, it's construction to perm. It's a lot of work. A lot of people don't like to do it, just like a lot of lenders that do residential don't like to do commercial loans. I'll do them as long as they're available, commercials or construction to perms. But the best selling point for you in that situation, Curtis, if you have something like that, is the same approach. Yeah, my client has already been working with my lender. They want to stick with them. But here's the funny thing. If it's a land and the builder's doing it, they don't have as many perks as they would unless they had a big development or something like that. If they had a development going on in a whole, new area that they're building and they're developing and, that's when they have all their perks. But if it's just a one-on-one situation, 9 times out of 10, you're fine.
Okay. Yeah. It's looking like there's a parcel they're interested in that I think you can only build maybe 3 homes on it. It's already been kind of like looked at and they want to go with the builder. There's a builder promoting the land that they can build, their type of home on.
Okay.
So it's not a big, it's not like a normal, big community.
Gotcha. Yeah, if it's a small community, you should be fine with that. You shouldn't have to worry about it. A friend of mine just did it not too long ago in a different state, and I coached them through the whole thing. So
okay,
yeah, I told them it was going to be easy, and they got it done. Land builder, they didn't like the builder after they chose them, but that was the only downfall.
Okay, all right, yeah, sounds good, man.
You got it. Anyone else? Wow. Anita, I don't know what to say, so I'm going to wrap it up and see if there's any more questions. I know we normally go to about 125. I'm sure my team would appreciate if I can get back to helping them out today.
Hey, Mike,
Yes.
I got one more question for you. First of
Okay.
all, congratulations with that alliance that you were talking about earlier that you guys have.
That's going to be beautiful.
Can you kind of speak to some of the benefits? Is that you guys going to be loaning your own money? Is that a warehouse line, or can you kind of give some little benefits of that?
It's going to be both. It's going to be the best of both worlds. Very good question. Best of both worlds. There's going to be some things that it's going to be guaranteed rate, and they're going to keep it. It's going to be guaranteed rate on it. So that will be the money line, and guaranteed rate. They got plenty of money. But then there's going to be some things that we're still going to sell out, and that's the reason why. I could have just transferred over the guarantee rate, and it would have been easier. But that wouldn't have been a problem. I still would be in the same office, just change my shirt. But the thing about it is that I still want to have the best of both worlds. The guarantee rate is not going to do a loan with a 560 credit score if we can get it approved. I still need those benefits. I still need those options. I like options. I still need to be able to do reverse loans. So when I have those things, or bank statement programs or stated programs, so I have to be able to broker out to my different investors. That's when certainty, I still get to stand with certainty on that. And I don't know who's going to be the investor on those programs. The one that I was just telling y'all about earlier, it's a commercial loan that I'm doing. It's 1.3 mil. And I have no idea who the investor is going to be. I mean, I know the investor, but I don't know who's going to service it. I just know I went with the one that we can get it done and I can submit a commitment letter to. and I can get it done as fast as possible. When you with banks like Wells Fargo, PNC, Bank of America, and or some of the local areas, they limit you to a lot of people and investors that you can broker with. And it's sad. I appreciate Guarantee allowing us to do this. The reason they don't want you working with a lot of investors because they don't want you dipping over there. There might be something better over there. The grass might be green on the other side. So that's why a lot of banks don't want you venturing out too much. But I like the fact that I can have the best of both worlds, and I have no desire to move anywhere. I see another question from D.
So is Curtis's question completed?
Yes.
Okay.
I think I covered that for you, Curtis, didn't I?
No, I just saw the hand was back up again.
Oh,
Anyway.
okay.
Yeah, my hand was just raised. Sorry about that.
Okay. So question, while you were talking about being able to do all these different kinds of loans, I was wondering if you do transactional lending?
I haven't. I've never done it. I wouldn't turn it down. And I know one time when I was at Wells Fargo, I almost stumbled upon one of those transactions, and it never happened. So that was the only time, and that was probably about maybe like 12 years ago or 10 years ago, okay? But I know that they do those here, and I know we're doing the bridge loans and everything, so I just haven't done it yet. So let me write that down now. Make notes. All right, I got to take notes with y'all. All right, I got that one down, and I'll find out right away, okay?
All right, sounds good. Thank you.
I'm glad you said that too. Jeez, all right, that's a good one. So, but we're
Great.
doing everything else, bridge loans and transitional loans, and we'll do some more research. And that means, Anita, y'all gotta bring me back on.
Right. So that's what I was going to say, because so once you all get all of that information together and share that with us, then we'll definitely make sure that we have you back so that you can go through everything, so that we will then be able to, be efficient enough to be able to share with our clients that we then will send over to you.
And you know what? Matter of fact, I thank you for that. And you know what? And I'll have some more information for Curtis. I just got an email that came over, and this is from my team, the builders team, and he just said something about pretty much in line with what Curtis was talking about. So I want to see if we got some more insight how we can help you out with that. So that's on the list too, okay? And that's going to be construction to perm loans. So we'll talk about bridge loans, transitional loans, and construction to perm loans.
Okay, that sounds great. That sounds great. Going one last time for any questions. Otherwise, Mr. Cooper is going to disconnect from us, and he's going back to his holiday. What is that? Decorations.
Just decorate. We got Christmas music playing in the office, the holiday music, and
So that's good.
I'm the only male, so they're trying to work me.
Got a little eggnog
Well.
on.
Yeah, they're gonna do that for lunch or whenever at that part we get. I guess we're doing it like 2:30 or something. So just having fun. You know what? We're at the end of the year. It's been crazy. We had highs and lows, but a lot to be thankful for. So why not enjoy it? You know?
Absolutely.
Yeah,
I agree
I'll put on my
100%.
Christmas hat later.
Oh, you should have worn it.
I'll save it for the next one. I'm gonna send y'all a picture though. I'll send you a picture of something that was funny.
Okay, that
I'll
sounds
send that to
good.
y'all. Y'all have a pic out of this. I wanna
Yes.
Mr. Cooper,
Yes, sir.
yeah, would you mind giving me your telephone number just in order to contact you?
Yes. And it's 301
Uh-huh.
655
Uh-huh.
3020.
Thank you.
You got it. I look forward to hearing from you.
All
Give me
right.
a buzz anytime. I'll be ready for you. And
right.
I'm gonna share the picture with y'all, Ms. Boyd. I'm gonna let you go, but I gotta send y'all this picture so y'all can enjoy this. Don't laugh too much, but I won the ugly holiday Christmas sweater contest this past week.
Oh,
Okay.
I'm all about it, man. I'm gonna have fun. Hey, y'all.
You in it to win it, huh?
I won it. I don't know what I did with the prize, but I won it. Maybe my wife took it, but I won it. So it was at a PG car holiday party, and I said, "Oh yeah, I'm gonna win this one." But
Okay, so if it was money or
I'll
a
send it
gift
to
card,
you.
I'm sure she does have it, and rightfully so.
There you go. There you go. Thank you all for allowing me to be a part of this today. And I wish y'all a wonderful day. Enjoy, enjoy, enjoy. Happy holidays to you all. And I'm sure we'll talk again before Christmas, okay?
Absolutely. Thank you again, Mr. Cooper.
Thank you.
I'm going to go ahead and I'm going to stop the